Good morning, viewers. Hope you all had a good Thanksgiving Day yesterday. Welcome to ST Money's Morning News, your weekday business news channel. It's Friday morning, November 29, 2024, and I'm your host, Sunil Thakker, or Sunny Talks Money. Let's roll. Technology stock investors had little to be thankful for in a day of sparse pre holiday trading. A sell off in giant technology companies dragged down stocks, while the latest economic data gave support to the Federal Reserve's cautious stance on rate cuts. In a thin trading session ahead of the Thanksgiving holiday on Wednesday, data showed the Fed's preferred measure of underlying inflation picked up. The index showed inflation running at an annual rate of 2.3% as of October, a slight pickup, but in line with expectations. Data showed consumer spending increased solidly in October, suggesting the US economy maintained its strong pace of growth, but progress on lowering inflation appeared to have stalled. While in line with estimates, the core personal consumption expenditures climbed 2.8% from October last year. The S&P 500 dropped 0.4%, the Nasdaq 100 slipped 0.9%, and the Dow Jones Industrial Average fell 0.3%. The Russell 2000 index was a little changed. All this on Wednesday, as yesterday was the holiday. While the stock market is taking a breather after the S&P 500 notched its 52nd record of the year, seasonal trends suggest the momentum could continue. Stocks fell, with tech-heavy Nasdaq Composite retreating 0.6% after a series of disappointing earnings from smaller computer and software companies. The S&P 500 information tech sector lost 1.2%. The declines came after Dell and HP reported lackluster earnings caused by soft consumer demand for personal computers. Management at both companies pointed to sales of products linked to artificial intelligence as drivers of future growth, but their shares fell 12% and 11% respectively. These weighed on the information technology sector, which dropped 1.2% as reported earlier. The sentiment spread to mega caps such as Nvidia and Microsoft, while the Philadelphia SE Semiconductor Index ended 1.8% lower. Software makers also took it on the chin, with CrowdStrike shares dropping 4.6% after the cybersecurity company reported a loss tied to its massive computer outages. The declines are partially a function of just how high technology stocks have run this year in anticipation of an AI driven boom. Workday slipped 6.2% after forecasting fourth quarter subscription revenue below expectations, hit by weaker client spending on its human capital management software. Shares of Symbiotic, a warehouse robotics provider, dropped about 36% after the company disclosed a $30 million to $40 million accounting error in its revenue recognition for 2024. Urban Outfitters stock jumped 18% after the retailer reported better than expected earnings. Meanwhile, Treasury yields fell, with the 10-year Treasury yield closing at 4.244%. It settled Tuesday around 4.3%. Bitcoin bounced, but remains some way off the near $100,000 high hit last week. It rose 5.4% to $96,643. In commodities, West Texas Intermediate crude was a little changed. Spot gold rose 0.1% to $2,636 a troy ounce. That's it for today, folks. I will see you again on Monday morning. Have a great weekend. Today's Black Friday. Don't forget to do your Black Friday shopping. Happy investing, stay inspired, and remember, it is all about money.